I just want to find out something. How are you position sizing?
My position sizing for me, you mean when I had the 15K?
Let's go back to like 3K and then work your way to like 15K and then keep going.
Yep.
Like, because I want to know how you're position sizing that. That's a tricky amount to start with.
3K was 3 good trades that I was taking, and my downside risk was 15%. So that was my
Okay.
stop loss on those trades
Okay.
was 15%. My upside is unlimited, right? So
Right.
I would take 3 maximum per day, 3 good trades, quality trades, right?
Okay.
If I won the first 2, I wouldn't take the last trade. I would just leave it. I would walk away, right? If I won the first one and I lost the second one, I would take the third one. Okay.
Yeah.
If I lost the first one and lost the second one, I wouldn't take the third trade. So I had this to like a T, right? At that, because I knew and I disciplined the crap out of myself to know when to walk away. If I was up in profits on the day, get out, walk away, right? If I
Sure.
broke even on the day off of my first 2 trades, I can go ahead and risk for the last trade. And I was telling myself this, and I was writing it down every single time. As a thing, I split my that 15K,
Mhm.
split it into threes. It was a little bit more aggressive though for me. So then after splitting it into threes, I was like, you know what? This is a little bit more of an aggressive approach for me. I kind of want to calm it down a little bit. So instead of doing
Right.
that, I divided it into 5 instead. So I divided it into a 20% position sizing, right? At that point of my account, which was 3K.
Okay.
So that's really what I did during that time, which I thought would help me because I wasn't comfortable, just doing the 3 trades per day like that. I was thinking,
Mhm.
I'll split it up at that point. The amount of money that I'm essentially risking to the downside is going to be less, right? Because
Yeah.
with that $3,000 level, right, if I'm going to 10% to the downside, that's $450,
Yeah.
right? So I was comfortable with that amount in that time. And as I was growing this account, I was adjusting that position sizing each time. That position start off and you're trying to figure out what your position sizing is. And this is the one thing I didn't know. You have to ask yourself on the downside, what is the most you're willing to lose? I'm not talking about the most without falling into depression, without losing, having it ruin your, like all of these things, right? You have to take into
Mhm.
consideration because you're not going to be able, if you're going through depression, you're not sleeping at night and all that stuff. How are you going to be ready to go
To
into that
trade.
box
Yeah.
during another day, right? The next day, you're going to be tired. You're going to be exhausted. Your mindset's going to be off, all these things. So that's why, like, position sizing, so you're down from where it was. Does that make sense?
Yeah, that makes sense. 100%.
Yeah, so once this was a strategy that worked for me. This was a technique and style that I was comfortable with, and I just wanted to stick to that. And I just wanted to keep on profiting based on that. And the style for me, that what I'm mentioning, is scalp trading. That's what I do. I'm quickly in and quickly out. I'm chasing the stock. I'm waiting for it potentially for a level that I see for it to come to me. I'm trading straight on supply and
Mhm.
demand by reading the tape, which is active orders that are being filled in the market, that are being
Mhm.
executed, actual executed orders. And then I'm looking at the order books, which is level 2, which is the orders that are coming in during that time that have been placed but not filled yet. And then I'm correlating that. I'm looking at the volume. I'm looking at what the futures are doing during that time. So my style is based off of price action of the underlying, no matter what. That's all I'm looking at. I will take the $1 to $3 to $5, whatever I have to. And in a choppy market, I noticed that this strategy for me has been super profitable because I'm not sitting there day trading and holding only, to get potentially clapped to the downside if I'm in
Right.
calls, right? Or get
Yeah.
clapped if I'm in puts to the upside. The market is crazy. It's always fluctuating. It's so random all the time. One set of a headline of news can come out and potentially dump the market. The opposite can happen right away. Feds can talk about, one thing or another, and then the market flies up. It's crazy. But if you're familiar with that, if you understand it, especially if we're in a super kangaroo market, which I consider that what we're at now. We'll
Uh,
10 points will fall 10. It's ridiculous, right? It's
this
super crazy.
I was watching like at 11 o'clock. Like right at 11, we had like a fake move on SPY. Like
Yep.
all people thought, oh, they've trapped the bears and now next thing it dropped all the way down to
Yep.
431. And then a sharp reversal. I was like, this is nuts. Like it's a lot to just deal with if you're sitting there like for hours. It can be draining.
for me, the market's never, there's no predictability in the market, right? The only thing that
React to it.
you have to adapt to the market. The market's never going to adhere to you. The market doesn't give a crap about you, right? But you got to adhere to the market. So you got to be able to follow that sentiment. You see a certain sentiment to the other way to potentially, you're going to have to adapt to it, because if we see a reversal to the downside and now the value is there, you're going to have to go in and figure that out. Fear and greed. There's other ones, FOMO and things like that too, but fear and greed are very big. And if you know it, and if you have the ability to just trust yourself in the market, understand what that potential risk, you will be successful.
Yeah.